Hey guys, how's it going? Lee here. Now, based on a video I made a couple weeks ago till a couple months ago, talking about the benefits of investing overseas as opposed to just Australia. Now, in that video, there was a lot of mention about, home bias, I guess conservatism when it comes to investing, and I guess all the information that I was presented with then, I kind of have reflected in the past couple of weeks. And it started with my growing lack of interest or enthusiasm about the prospects of growth or the strength in the Australian economy. Now, when you have an economy that's highly reliant on finance, exports, and woolies, and in a new age of tech where we're using buy now, pay later as well, who've just been shooting and skyrocketing in terms of valuations, I've found it really hard to find anything outside of that to really, get behind, especially when these are companies I've never heard of, services or products that I've never really used and haven't really been proven in the market. I'm really just taking a stab in the dark. And as much as I love to talk about Australian businesses and companies just because they're Australian made, there is just not as much interesting developments or growth or prospects or even content surrounding them as much as there is in American stocks and companies, which makes up 40% of all equities around the world. Now, with that being said, am I saying you can't make any money with Australian equities? Of course not. That's absolutely silly. You can make money in any market around the world. You just kind of got to get a little bit lucky and kind of know what you're picking and stay with it in the long run. So I guess in this video, what I'm going to go over is my portfolio, highlight some of the not so good stocks that I bought when I first started investing and have just held for so long. I'm going to be going over the stocks that I will be selling just to be funding my American account, which I've opened up with Stake. Initially, I had used CommSec International, but the platform is really bad. Like, if you've ever used it, it's just not a very good experience. So I've started using Stake. If you guys want me to do a review on Stake, I can definitely do that. The referral link is down there below if anybody wants to start investing through Stake with me. Also, there's a referral code down there. If you use that code when you sign up and fund your account with at least $50, I believe it is, you'll get a free stock, I get a free stock, so it's a win-win. Now guys, before I go into the portfolio, I wanted to reiterate a couple of points that I made in my previous video about why investors don't go over into the US. In the report, it noted, I think around 70% of investors, especially young investors, said that they would rather have a guaranteed return. And in Australia, it makes sense, right? A lot of our companies pay out dividends, and that's kind of like receiving rent. And Australians love property and love receiving rent. We love our cash flow. But however, that is really minuscule when you're talking about a 4 to 6% return with very little growth in terms of valuation, as opposed to stocks internationally that have so much growth potential that jump up by double and sometimes triple digit in terms of percentages. And what's interesting to me is that it's actually counterintuitive to what we've been told, especially by experienced investors who say that you should be taking a lot more risk when you're younger to, accumulate your wealth and, see that exponentially increase with compounding interest over time also, and then taper off and go more into bonds or more into those dividends that the young investors are going to as you get older to preserve your wealth and just collect the cash flow checks. So with all of that in mind and the lack of innovation that I see within Australia and just the total addressable market, which is so small, because all of these jumps in valuations in Australian companies always tend to happen once we head overseas, and when we go over to the US, when we go over to the UK, and the potential for a new addressable market is totally unlocked, and the customer base goes drastically higher when they've just started there. Think of Zip, think of Afterpay. Zip's only just started there recently, and then their customer base has skyrocketed, and I would say the average American, probably one in every maybe 10,000 might know of Zip. So guys, this is just going to be in a slide format, but the first one is Orthocell. Now, this is a stock I bought because I wanted to delve into biotech, and I heard great news about regenerative work that they came up with a product that would restore mobility function to people who were injured. Now, on the surface, when I saw the stock, it seemed to be great, and it had promising results. However, as I have matured as an investor, I realized the TAM, that's the total addressable market, was rather limited, and like any other biotech stock, will continue to sink money into research until it not only works, but passes regulators' checklist and is adopted by the market. And even then, it's a small market, like I mentioned. That's not to say though the biotech sector is something you should pass, but just understand that there's a lot of research and development that goes on behind the scenes, and all this time, there's money being sunk all along the way in hopes of something gets discovered and goes to the market. But in saying that, any news, if you get any good news around your biotech company that you've invested in, generally will skyrocket that share quite drastically, even if it hasn't gone to market, just like we've seen with Pfizer. But yes, OCC is a sell for me. Now, the next stock on the list, which I've had a lot of people ask about, is Nearmap. NEA. This was a stock that gained a lot of attention in the past and had such potential to take off with their contracts over in the US. And if you guys don't know what they basically do routine aerial mapping and provide that mapping to businesses that conduct their work outside. So it saves them a lot of time because certain companies or businesses can plan how they're going to go about it, and they can see very fine details that they wouldn't have otherwise if they just used maybe a Google Maps. But yes, they gained a lot of popularity once they got a few contracts over in the US, which is, again, look, why I'm looking to go and invest into the US as opposed to Australia, because here we go, an Australian tech company secures contracts in the US and boom, shares go up. You see what I mean? But yes, anyways, with the Rona going on and Biden now winning, it seems like things are going to go on lockdown, so I don't think there's going to be much outdoor construction infrastructure things going on at the moment. So yeah, Nearmap, as much as I want to hold on to it, I think I might sell it in the next week or so on a green day. The next one is some MJ. Now, if you don't know what MJ is, not Michael Jackson, the other MJ, you can check it out. It's called Althea Group. So I have invested in Althea Group for quite some time now. And this all started around during the time where there was a lot of hype and talks about legislation all over the world, and in particular in Australia, about the legalization of MJ. Now, in regards to MJ in Australia, there's only about a few companies that hold licenses to produce and sell, and it's all well for medicinal purposes. Now, I'm not sure whether I'm still going to keep this stock. I think I might, just because I don't want FOMO should there be talks about legalization again and this stock actually picks up. It really didn't cost me much to invest into it, so I don't think selling it is going to do me any good. So what I'm going to do is I'm going to hold on to it because it is what it is. I already have it anyways. And if there's talks about legalization later on, I don't want the psychological trigger of me going, oh damn, maybe I'll buy back into it or anything like that. So I'll leave the stock there. Althea Group, you got to have an MJ stock. Now the next one is iSign.This, another stock that I made good money on, but is now, well, delisted from the ASX. Now, it's a sad thing because I actually really like the tech and this business, and it could have had so much potential because it was delivering KYC, or Know Your Customer, technology that banks would be using into just other mundane businesses to meet regulation requirements. Now, as you might know, the whole onboarding process is a friction to establishing a customer. And so if somebody like ISX can do that for a business for a fraction of the cost and having it meet its European or any other forms of regulation, and I say European because they got accepted over in Europe and have been integrating it into other forms of businesses, especially gambling and some finance businesses also. Now you might be wondering, why did they get delisted? Well, there was some accounting issues where certain numbers were being played with because there were incentives for those at the top, so on and so on and so on. You get where this is going, and they've been trying to get it resolved, and I've been reading announcements and updates, but there's been no dice, and I don't think the ASX has any intention of letting them back in. Unfortunately, it is a good service and it is still running. Just, it's annoying that I can't access my profits or even continue to invest in the business. So regardless of the profits I made, it's currently being delisted. That's another lesson for you guys as well. Okay, now we're on to the last three. Now the next two should be no surprise because I mention these ones all the time. And that is Westpac. The first one's Westpac. I am a Westpac shareholder. It's probably one of the first stocks I bought, and it's funny, right? It goes right into that psychology of wanting dividends, playing it safe as a young person, and just having compound interest work over time. And well, we've seen what happened to interest rates recently. We've seen what happens in regards, or what has happened in regards to Westpac and receiving fines, lots and lots of fines. I'm not sure whether I want to hold into this. In saying that though, when they do pay out a dividend, the share prices tend to go up, just before the dividends are paid out, ex-dividend. So I might sell it around then, or I could just hold on to it for quite some time and just keep receiving my small little amounts of dividends just because it'll probably psychologically make me feel better. We'll see. All right, the next one is ZipPay. Yes, Zippy Dip. After my Afterpay holdings were sold off, which I'm so frustrated about because if I held on to them, I would be well into the six figures, but FOMO, you know, the roller coaster ride. Man, I would have needed balls of steel to hold onto that stock throughout the entire roller coaster ride, even when it went down to $9 a share, because I didn't get it at the rock bottom when it had first started coming out, guys. I caught it like somewhere in the midst of its hype. Anyway, so I would be well into the six figures. That's all I have to say. But anyways, we learn and we move on, and we know to buy and hold, not to sell. So ZipPay is one I won't be selling because I've, well, already made my cost basis back plus some profit in there, and I believe there's still more updates and growth to be had. I know Westpac has recently cut ties with them, but that really doesn't matter because their expansion in the US has only just started. So that's just, yeah, a hold for me, and this stock alone has made up for any losses I've had previously and truly goes to show what Warren Buffett and many other successful investors have spoken about, or even business owners have spoken about. You can fail so many times, but it only takes one or two or a couple of ones that you pick correctly to really take off and really get you to the point that you want to be. In this case, lots and lots of money in terms of profit. So ZipPay, definitely a hold. Now, last on the list you guys might be surprised about, but it's actually SelfWealth. Yes, the platform I actually use to invest in Australian stocks. Now, SelfWealth has Australia's cheapest brokerage, which allows you to purchase shares with your own individual HIN. And with the introduction of an international platform that should be coming out before Christmas, I have a feeling this platform and the share price should take off as it continues to grow. Now, there are a couple of things I think users don't like about this platform, like the interface kind of sucks and is a little bit childish with grading and whatnot. The app definitely isn't ideal if you've ever used the app on your phone. Very bad experience. Sometimes it doesn't even let you scroll to the bottom. It cuts you off at certain parts. The keyboard comes up and then it'll stop you from scrolling, so you've got to put the keyboard down. All kinds of bugs and errors and whatnot, and they don't even have an iPad version. But they are doing a revamp, which has had me very hopeful. And I've listened to a podcast on Captain FI with the marketing manager from SelfWealth, who's looking to improve all of this. So very hopeful that this actually picks up over time and they continue to gain more of a customer base as people want to cut costs down, especially when it comes to investing. And so for me, I will be holding on to SelfWealth as it continues to increase its customer base, continues to create a better interface on the phone and app. Please make sure that it's better for the experience of everyone else that's using it. So yes, guys, that's it for my portfolio. I really don't hold a lot of random different shares. There are a few random ones in there that, oh man, definitely learned a lesson or two about. So I will be now investing just in the US alone, unless I really see a good opportunity in Australia that I couldn't find the equivalent of in the US. Like I said, I did use CommSec International initially. I'm now on to Stake. The referral code is down there below. If you choose to join, please let me know. Use the referral code, fund your account with at least $50, and we'll both get a free stock. That'll be really awesome, and I really appreciate it, and thank you guys also. Hope you guys have a great weekend. That's it for me, guys. I'll catch you later. Cheers.